Hi there, it's Bill with Smart Trades. It's August 7th around 1:30 p.m. Pacific Time. Um, as always, if you want more frequent updates, please visit smarttrades.com. I hope to update today on do live Twitter updates after we open on the futures around 3 o'clock Pacific Time, 6 o'clock Eastern Time. And anyway, let's get right into it. If you remember back on July 26th or so, I said I still favor a bearish short-term pattern. I suspect Washington will accommodate New York and try to scare stocks out of the weak hands before taking the markets higher. This allows for bad news, a panic down to 1280, 1290, good news, and a bottom, and then we get our rally to new highs. Beware, however, they may screw it up. A break of 1250 kills the pattern, as does a rally above 1360. Okay, I actually think that scenario I mentioned a couple weeks back or so is actually playing out, but I don't think I was thinking big enough. The news of the S&P downgrade came out after Friday's close and after my reports. Obviously, the downgrade will probably at least produce a short-term bearish outcome. But, I really don't know. We'll have to wait and see. And again, I'm going to update that live on Twitter after the open. At least I hope to, at least for part of the afternoon. On Friday night, just by the way, I was barely listening to CNN when I heard the following said by John King, and I quote, "And what Treasury officials are saying and other administration officials are saying is that S&P had made its decision, had told some people in the financial industry and in the markets that it was what it was about to do, that it was about to do the downgrade, and then simply refused to change its mind when they refuted the analysis." I couldn't believe my ears, so I checked the transcripts, and again, what John King said was that S&P had told some people in the financial industry and in the markets that it was about to do the downgrade. I'm not surprised that S&P leaked the downgrade to some people in the financial industry and in the markets. I'm not surprised at all about that. But what I'm amazed at is that Treasury officials and other administration officials were told that the leak had occurred and readily admitted it to John King. Moreover, Anderson, Keeping Them Honest Cooper, and Ali Yermani Velshi didn't blink. They didn't say a word. It didn't even seem to register that they had been told that the S&P had leaked this information to folks on Wall Street before they had made it public. And again, this is from the transcripts. If you want to check them at cnn.com under transcripts and just search for August 5th. Anyway, it's being widely reported that the S&P made a $2 trillion math error. However, no one is suggesting S&P may have made an ethical breach, which resulted in a $2 trillion transfer of wealth from the American public to those, quote, people in the financial industry and in the markets, which they had told it was about to do the downgrade. Again, not my words. This is from John King on CNN. Anyway, here's how it's played out so far. You can see here back in late July, the S&P actually hit my triangle target around 1280, 1290. From there, we got a bit of a bounce. However, in the wee hours on August 1st, a sell-off began. We declined, took out the 1250 area, and then again, it looked like we were getting a bit of a bounce from the 1230 area or so. This is on the S&P futures, this chart that you're looking at. I suspect that the S&P leaked this story to its friends on Wall Street, either on this peak on August 1st or perhaps early in the AM on August 4th, or at least that's when they decided they were going to take advantage of the information. Obviously, the information was actually brought to the public after the close on August 5th. Again, note the very early AM hours for these peaks here, which is not that unusual, but in this case I think it's interesting. Here's how it played out in the NASDAQ. Again, here's that 5-wave structure which I had noted in a previous report here. You'll notice that we had pretty good breadth ratios off of these lows here, and here's the test of 2320. That was my original target for the NASDAQ, and we tested it from below. And this is where I'm relatively certain that folks in the know knew about the S&P downgrade ahead of the public. Now, here's my updated count. I actually posted this on Friday, I believe. And again, this still allows for the triangle, but in a B wave position, A down into the March lows. We have an A, B, C, D, E triangle of B, and from there a C wave down, 1.618 times A approximately. At least it's held above that level so far. We shall see. If we drop substantially below Friday's lows, that's around 1160 or so, I would say that this count becomes much less likely. Some kind of a downturn, I suspect, is going to happen when we open, but we shall see. And again, I'm going to update that on Twitter. Now, here's the much more bearish count. A down to the March lows, B up to the April high, C down to the June lows, and from there we have a 5-wave structure that failed to make a new high in the S&P, actually made a new high in the NASDAQ. Not an ideal 5-wave pattern, but it certainly can be counted as such. And from there, you have a peak at 1356.50, wave 1 down, wave 2 back up, and we're in an ongoing third wave, or possibly completing a third wave down here around 1160 or so at the previous fourth wave support, which, by the way, is 1173. Now, it's not beyond the realm of possibility that third wave could extend, obviously, and we shall see. Once again, I will update this live on Twitter, so please go to smarttrades.com if you want to subscribe to that live Twitter feed, and hopefully I'll see you there later today. At any rate, thanks so much for watching. Hope you're having a good weekend and a good week ahead. Talk to you later. Bye-bye.